Thank you so much for joining Dental Marketing Theory, a podcast by Gary Bird. In today's episode, Gary talks with Kevin Cumbus. Gary and Kevin talk about what it takes to grow your practice, and does culture really matter? As always, please make sure to like, subscribe, share, and leave a comment, as all of those things really help to get the word out about dental marketing theory. Hope you enjoy today's show.
All right, we are live. Kevin, good to have you on. Thanks so much for coming on today.
Hey, great to be here, Gary. Thanks so much.
Absolutely. So I wanted to start off and have you give us a quick rundown of how you got into the dental industry and how you ended up being on this side of the business world.
Yeah, it's an interesting story. My father is actually a pediatric dentist from Montgomery, Alabama. Okay. So I was officially born into this business, although I did not follow in his footsteps. When I was an undergrad, I tried to become a dentist, did everything in my power. But the chemistry department said, Cumbus, look, we appreciate you showing up to class. We see you working hard, but a D- is not going to get you into dental school. So we're going to have to pass on that. Good news is I was, getting A's in accounting, economics, and finance. Ended up heading up to New York City, had a great career on Wall Street, both in New York and then down here in Charlotte, and doing sales trading and investment banking. A career in dentistry, wet finger dentistry, was never going to be for me. So I found a way into Wall Street, was a sales trader and investment banker both in New York and down in Charlotte, and just had a great career there. Was talking to my father because I was in a career where I was frankly making more money than I could spend, but really didn't have any mentors or leaders that I wanted to be with. Nobody on Wall Street has pictures of their kids up. Nobody talks about their children or coaches Little League. Wow. And I wanted that. I wanted to be present for my family, and had just started a young family. And called Dad and I said, I don't know what I want to be when I grow up, but I'm pretty sure this isn't it. And he goes, there's someone who's helping me sell my dental practice. Maybe you want to talk with them. And I think within 90 days, I had left the investment banking world and was working with a group called the McGill & Hill Group here in town, valuing and selling dental practices. So that was my first entree into the business of dentistry. I'd worked with publicly traded businesses. I was used to S1s and large annual reports. And let me tell you what, the business of dentistry is not clean. The finances are not clean. The numbers are not clean. I call it straightening spaghetti. Sometimes is what we do on the finance side. And it was fascinating, right? Because these businesses, they're business babies. These dentists are so inextricably linked to their business. They are their business. And we'll talk about risk and reward and all of that down the line. But it's not as simple as looking at the numbers in isolation and academic vacuum and coming back with value. And that's what I really loved about it, that there were emotions and people attached to these businesses, and these doctors just wanted to sell them to the right people. So got exposed to this world, fell in love with it very, very quickly. At the McGill Hill Group, we were normally doing valuations for the sale to an associate, so a partnership deal. We did very, very little brokerage. Maybe 10, 20% of our business was brokerage. But on the brokerage deals we were doing, we began selling practices to Heartland. And the minute I got exposed to Heartland, the light bulb came on for me. I said, oh, wait a minute. There is so much more to this world of dentistry than I ever thought. Rick Workman and his leadership team were kind enough to invite me out and teach me value creation from the DSO side. I'll never forget Justin Wendling and his mentorship over the course of my career, and him showing me, buying low and selling high. And their business model was masterful, right? Because they were paying more than 100% of collections, which effectively was 2 to 3 times EBITDA. And then they were selling their business to another private equity group for 10, 12, 13, ultimately 14, 15 times EBITDA. And they were making that arbitrage, the delta between 3 times and 12 times. The doctor felt like they were getting a win. Heartland certainly was getting a win, and investors were all getting wins. So when I saw that model and was exposed to it, I knew I wanted to be involved in the DSO community. Left there, went to left. Go ahead.
No. Keep going. This is really good. I'm just taking notes.
Yeah. So good. So I was at Rogers Shop for about 4 years, did about 120 transactions over the course of that 4 year run. So very, very busy, very, very active, but knew I wanted to be in the DSO space. So left to take an operations and business development role with Affordable Care, which is the private equity, which is the DSO that owns Affordable Dentures. They were owned by American Capital at the time. When I joined, they had 120 locations. When I left, they had 210 locations. And
Mm.
there is when I really learned the business of dentistry. Looking at a profit and loss statement, a balance sheet, or cash flow statement, it's really easy, Gary, to say you need to turn your marketing down just a little bit, decrease your lab expenses just a touch here. I know you need to lay a bonus program in. It's easy to say looking at numbers, but when you live in these practices and get to know these people and see how hard it really is to shave a point or two off the expense side of the income statement, you gain a deeper appreciation. I mean, I was inside of a practice at least Monday through Thursday, 3 days a week, and I got to
Mm.
see how these practices operate. I'll never forget the first week I worked the front desk at an office in Wilmington. The next week, I worked as a dental assistant. Then I worked pouring up models in the back. By week 5, I called my CEO and my COO. I'm like, "Look, what are you doing? Like this is not what I signed up for. You've got a former investment banker who knows how to run models, who knows how to run Excel." And he stopped me right there and he goes, "Listen, you are worthless to me if you don't know how our business works from the ground up.
Mm.
You will do every job we have except for being the dentist, so you can fully appreciate how hard it is to do what we do." And that was humbling, but it was exactly what I needed to hear and really helped me kind of keep my mouth shut and my eyes and ears open. So loved my time at Affordable, opened up a lot of the Texas market for them. And then Gary was foolish enough to think that I could go out and do this on my own. So left Affordable Dentures after about a 3 year run and built a dental practice with a friend of mine down in South Carolina
Oh,
called
wow.
Mundo Dentistry. Yeah, we went from a cold dart shell to 1.4 million over, it was about 3.5, 4 year run. For those of you, those dentists out there who have done this before, it will be familiar when I tell you that my wife was asking why we had to personally guarantee the loan. Once we got through that hurdle, every night she would ask me what was production and what was collections and what the AR balances were every
Uh,
single night.
oh,
So
man.
I've lived that world in real time. Uh, it was exhilarating. It was stressful. And I came to the realization that that was not my highest and best use, and ultimately sold that business to my associate. And it was like a boat, right? I was happiest the day we started the LLC. That was the greatest moment for me starting that business, but then it was only eclipsed by the date I sold that business to the associate. Um, so sold that business and had kind of started Tusk in the background. When I talked to other entrepreneurs like myself that had gotten involved in this business, and dentists in particular, it was clear to me that there was information asymmetry in the market, and the buyers had a lot of information, and the sellers didn't. They weren't armed with that same
Yeah.
information.
Hmm.
And it became clear that there's a business there. And if we could create something where some of that arbitrage started to sit on the seller side of the table and fair prices were still paid, that we could build an M&A advisory shop that leaned heavily on my experience in investment banking, leaned heavily on my experience in the business of dentistry, and we could create a lot of value for a lot of people. So Gary, last year, we did 20 transactions, almost 2 a month. We created transformational, multi-generational wealth events for a lot of clients. And I'm happy to say that the buyers are happy too, right? It's not just
Yeah.
squeezing. You got to leave some value on both sides of the table, but it's been a heck of a run. I adore the business of dentistry. I admire greatly dentists who are growing and building dental practices and building businesses at the same time. I've got an appreciation for that. It is hard, hard, hard work. It is physically
Just one of those
demanding
is
work.
hard,
And
right?
then
Just
right. Yeah, that's
yeah.
right. So it's a joy to get to be in this seat and see the industry from this perspective.
That's awesome. So there's so much good stuff there. We could probably talk for 3 hours on all of this. So I want to go back to what you said there about straightening spaghetti on the financial side, right? So if someone's in dental, they may not understand what you mean by that. So can you give us like a contrast of what books look like in a lot of the business world compared to what dentistry is dealing with, and why that creates so much complexity and so much opportunity?
Sure. So let's start with the business of dentistry. An individual dentist is the number one producer, and also in many cases the owner of that business. And what he or she is focused on is their personal production and how much cash is in the bank at the end of the day, week, or month. And they're not really thinking about overhead per se or normalized doctor compensation or EBITDA. What they're really focused on is, do I have enough money to take great vacations, take care of my kids, and cover my retirement? And I will tell you this from my experience, my father, after he made a certain amount of money, it wasn't worth it to him to work another hour, day, week for an extra
Mm.
10, 20, $30,000. He'd officially reached the point of diminishing returns, right? So he wasn't going to
Mm-hmm.
work another day to for another return. So this is what private equities recognized, that there's effectively inefficiencies throughout dental practices. And dentists really, it's been our experience, individual dentists in particular, and many growing DSOs don't pay up for great accounting. They'll take whatever comes across their plate. They'll work with their brother-in-law, their sister-in-law. They'll work with a non-dental specific CPA firm, and then when they're growing and scaling, many times they won't have a common chart of accounts. So they won't know what their profitability is on a by location basis. They won't be able to track expenses across multiple locations. And when you ask them how their business is doing, you'll typically get a response like this: "We produced a lot of dentistry last year. We killed it." And I'm like, that doesn't tell me anything, right? But
Yeah.
if you talk to someone in
Well,
another line of work, they'll
it tells you how well the dental side of things went, right? So that, which is awesome. But yeah, there's a whole nother side of business there.
That's right. I know nothing about the cost side of their business. I know nothing
Mm-hmm.
about the growth of the business, and production is many times not a great indicator of collections, depending on if you're a Medicaid-based business or if you're in a PPO market. So when we're told we produced a lot of dentistry this month, we'll kind of look at each other around the conference room table and go, "We're going to have a lot of work to do here. We know that there's going to be a big mess in the income statement." Also on the income statement side, it's a it is a when you own a small business, you have the opportunity to create some really nice tax savings. You can employ your children, you can employ your spouse, you can run business expenses against your income statement. And many dentists have learned to take great pride in running a bunch of business expenses in air quotes against their income. Publicly traded businesses don't do this, and that's what I was accustomed to working with when I was at the investment bank. So we spend a lot of time distilling out all those quote unquote business expenses and personal one time non operating expenses to really get down to core EBITDA. Again, we're happy when doctors run big expenses through because it's ad backs for us, but you've got to know where to look, and you got to kind of do the hard work and roll up your sleeves to figure out what the true operating profit is. Most of our clients don't know what their operating profit is. They just know what their personal cash flow is.
Mm. Okay, that's huge. And then, so you said you went on to Heartland, and you worked with Heartland, or you did something with them, and they really helped you with a couple things around value creation. Could you walk us through a little bit more into that and what you did there, what you learned, and just anything that you can share there?
Yeah, so I was representing sellers. So we were working in a brokerage capacity, and
Mm-hmm.
Heartland would want to put bids on the deals. And so I would go meet with Heartland early and try to understand, help me understand your deal, help me understand your transaction. And it's the first time I had seen a post sale employment agreement along with a commission and a non compete radius carved into deals. Right, Heartland is really the grandfather of this modern DSO space. So, what was shared with me is the way that they think about value is a function of two things. One is cash flow, and one is the riskiness of that cash flow on a go forward basis. And the longer and the biggest risk function was the doctor. If the doctor was willing to work post sale for a certain number of years, it really helped de risk those cash flows and created a
Mm.
lot of value for them. So
Hmm.
once I understood that, the whole DSO world kind of came to light for me. What was most important to them was post sale employment term and post sale employment commission. Because with those two variables locked in, Heartland knew that they were good at making the phone ring. Heartland knew that they were good at converting phone calls into appointments and appointments into confirmations and confirmations into butts in the seats. And they were also armed with the knowledge of uh, dentists have normally hit the point of diminishing returns and they have inefficiencies throughout their business. So they knew
Hmm.
they could find additional opportunities, not limited to decreasing dental supplies and decreasing lab bills, right? So they were armed with all these great tools, and they could lock in the doctor for 4 or 5 years, and they could afford to pay more than any individual dentist could, and that was their secret sauce. And they didn't have to pay much more than any other individual dentist would. In many cases, it was 15, 20, 30%. That's about it.
Yeah. And so when you said that the light went on about the DSOs, what was your perspective beforehand? Before that?
Yeah. So beforehand, again, you gotta kind of gotta know the history, right? So Dad's a pediatric dentist in Montgomery. I was accustomed to him being the business. Every time he would go to Win Dixie, it was Dr. Cumbus this and Dr. Cumbus that, and look at my tooth. And so I grew up in that environment, and the words corporate dentistry used to scare me too. Right?
Yeah.
I don't want a corporation telling my father what to do or any other dentist what to do. But Heartland had a way about them because they were dentist founded, because Rick was put such a vital key player in the early business development efforts, and they were really good at integrations. Oh, by the way, they could pay more than anybody else would. They became a more viable buyer. Um, I saw a true business at work and a business that was good at putting patients in the chair, something that most individual dentists really weren't great at. Gary,
Hmm.
marketing has come a long way since the
Yeah.
'90s,
Yeah.
and they Heartland had some really good tools at their disposal. Their promise was, their hope was, their line was that your life will be easier. We'll take care of the management side of the business. You're going to be paid a commission, and we can grow your business to the point where you will have already been paid for it, and very likely you will be making as much or more cash flow in working with us. And I saw that manifest itself over and over and over again. Now, valuations have gotten so high, and it's harder to grow bigger businesses. So I don't see this happen as much. But Heartland was successful in multiple transactions that I represented in having the doctor's personal cash flow go up and buy their business. And you see that enough times, you go, okay, this is real. This is not just hocus
Yeah.
pocus.
Yeah. It wasn't lucky or someone just, hit the right button one time. It was part of the plan, right?
That's right.
So let's then you said you ended up at affordable dental care, and that was dealing more with dentures. What exactly were you doing with them? How were you helping them, and what happened when they went from 120 practices to 210?
Okay, so I'll start by saying this. When I left Roger's shop and took that job, my father was furious. He said, "You're going to work for corporate dentistry." I said, "Yes, sir,
Yeah.
I am. I can't wait. It's going to be great." So, this is still the temperament of my house. Like
Yeah.
Thanksgiving was super uncomfortable that year. And I said, "Dad, look, here's the deal. I'm going to work for a company. They were like 80% dentures at that point. That provides a service, dentures, that most dentists don't want to do on a population base that most dentists don't want to serve. I mean, their average denture set was $300, $400. So they saw Medicaid patients, um, and they're in communities that you don't want to be in. So they were typically in more rural communities like Kinston,
Mm.
North Carolina, Rock Hill, North Carolina, Lenore, North Carolina. And I said, Dad, what they do is pretty remarkable because they provide this service, and what they provide life changing dentistry every
Mm-hmm.
single day. And I mean, I've never seen more tears of joy from patients who, when they receive a new smile and see themselves in the mirror.
Yeah.
It's an amazing business that Affordable Dentures has built. So my role there was in operations and business development. really trying to bring regional operations, right? Trying to bring value additive ideas into these businesses. Um, I think that the secret there is it is like water on a rock. You have no power. You can only influence through, let me show you this case study. Let me show you this case study. And affordable dentures, the dentists truly are in charge. Whatever they say is the gospel. I think Affordable built a really nice business where the business people provide guidance, provide facts, provide numbers, provide ideas, but ultimately the dentist makes the decision. And
Mm.
so there were, and I think that there are really good DSOs that continue to do that today. It is not a top-down approach; it is a suggestion-based business. So I get there. It's 120 locations scattered throughout the U.S. They open up a lot of locations. It is
Yeah.
almost exclusively a de novo model. I mean, they've got to have a laboratory, in-house laboratory in every one of these. So, I mean, Affordable has a monstrous business. They have a real estate division that is always looking for new locations. There's an operations team, recruiters like you wouldn't believe. And then when you open a business with them, you do days and days and days of training. We would get there early. It's a 2 week soft open followed by a 1 week announced open. I really got to see a well-oiled machine. And when you're
Mm.
opening in that many businesses over a short period of time, you better get it right.
Yeah.
Unbeknownst to me, they were, so American Capital owned them. They ended up owning them for 7 years. About a year after I left, they ended up selling that business to Berkshire Partners for north of $800 million. So
Mm.
I saw a lot of the leadership team do
Berkshire
quite well.
is Berkshire, is that that's not a Warren Buffett, is it?
A Warren Buffett, I believe it's a Warren Buffett private equity arm. So it's
Okay, got it.
Berkshire Partners, not Berkshire Hathaway.
Got it. Okay. I knew I recognized that name. So
Yep.
they bought it out, and why
Yep.
that was why you were there?
No, it was shortly after I left, right? So I leave
Okay.
and they sell this business for $800 million, and I'm sitting on the sidelines going, "Congratulations!"
That's awesome. What
Yeah.
was the main takeaway from that? Because that's a huge jump from pedo heartland to denture. That more it's a different business model when it comes to dentistry that you were in there. What was your main takeaway from there?
Um, my main takeaway is that the dentist, and I don't think this is unique to affordable dentures. The dentists, the providers, have a ton of power that does not exist or manifest itself in their contracts, but they have a lot of power through them being the providers of care. And what I saw is a lot of compassion from the leadership team when a dentist needed something, or a dentist had a complaint, or if a dentist wanted to do something new or exciting inside of his or her practice. Our leadership team actually listened. Our biggest fear was zero revenue days, dark revenue days.
Mm.
And we saw that sometime when conflict arose, sometimes between a dentist and the leadership team, or other reasons. And I think I don't believe that dentists inside of DSOs understand how much power they actually have,
Yeah.
because of what they contribute to the business. Now, that's not to say it's a big red button you should go push when you have an issue,
Yeah.
but I think it's important to note that leadership wants to collaborate with the dentist and keep the dentist happy, because again, they're thinking about exit down the line, right? And we've already talked about valuation as a function of cash flow and risk. So the better the relationship the leadership team and the DSO has with the dentist, the less risk there is in that business for the long haul. And it's something that I've seen time and time again with all the businesses we've looked at, even here at Tusk. The better those relationships are, the higher the valuations, the better the culture, the happier the team members.
Yeah.
And dentists really do have a lot of power inside of the businesses that they work in that are affiliated with DSOs.
Yeah, so true. They really do hold all the power. No dentist, no dentistry. So did your dad change his mind on corporate dentistry? Like, did you change his mind while you were there, or did he kind of stay in that mindset?
It's a good question. He came around on affordable dentures ultimately. He
Got it.
understood the value proposition that affordable dentures provides to the patient community. When I asked, he ultimately sold his business to a local dentist, to a pediatric dentist, And I check in with him just about annually. And I said, if you could do it again, would you have sold to a private equity backed group? And he reads the blogs and he looks at the webinars. Now he's retired, so he's checking in on me. And he goes, you know what? For me, it's not the right fit. I understand it. I understand the value proposition. Um, but for him, it was more about legacy planning and more
Yeah.
about making sure that his team would be taken care of than it was wringing every last penny out of the valuation of his business.
Yeah.
So he gets them, he understands them academically, uh, but it wouldn't be the right fit for him, Gary.
That makes sense. That's a really good way to put that. And not somebody's right answer is not somebody else's right answer, right? And so there's lots of options out
That's
there,
right.
and I love that mindset.
Well, and we come to all the conversations we have in the market, at conferences on this with you, and when anybody calls, we just want to make sure you're making a well informed decision
Mm,
about who to sell your practice to. A lot of it's not uncommon for us to get a call and someone will say, "Listen, I want to sell my practice to a Chapel Hill grad. I want someone who went to UNC Chapel Hill to that dental school. That's my dental school. That's who I want to sell to." And we'll say, you can certainly do that. We can't help you because we don't do those trades. But if you want to do that, it's likely that your business is going to trade for 75 to 90% of collections. Are you aware that there are buyers out in the market who will probably pay your business for 2 to 300% of collections? Well, and if the answer is no, then we have some education to do. If the
yeah.
answer is, yeah, absolutely, I'm well aware of those guys, but I want to sell to an individual dentist, no problem. We'll refer you to somebody who can help.
Got it. That's really good to know. So now you are, you leave there, you leave affordable dental care, or I'm sorry, affordable, dental care, and you go over to Mundo Dental. Did I get that right?
Okay, so I leave affordable dentures, and I'm gonna start a new business, right? So I'm sitting at home in Charlotte, going to some shared workspace and working on a couple business ideas, and ultimately land on starting a dental practice with a dentist here in town. So we
Mm,
we survey the market and recognize that Spanish speakers are severely underserved in the dental community in Charlotte. It is one of the fastest growing demographics in the Charlotte community, yet their choices for dental care are are far from adequate. Cinder block buildings, old equipment, really not honoring the patient at all. And we decide that we're going to build a technology first, beautiful state of the art business with cone beam, with Cerac crown, that honors their time as much as anything. Built out 9 operatories, managed that process over the, over the course of starting this business up. We lost 2 associate doctors before the practice even opened. I mean, it was rough, Gary. I mean, it was very, very stressful. But finally got the practice open and finally found the right dentist who believed in the mission, who believed in the patients, and was eager to learn Spanish and provide excellent care to the clients. Um, this what I don't typically tell folks, but I'll tell you. I don't speak a lick of Spanish, and everyone in the whole office spoke Spanish the entire time. So it was kind of doomed from the start for me, knowing that I couldn't contribute vocally to that business.
uh-huh.
But we found the right people to help serve the patient base, and that ultimately was most important. And I'm actually a patient of Mundo still today, so
Oh
that's where
wow.
I
Okay.
go to get my teeth cleaned. Yeah. Oh, I
That's awesome.
love
I
it.
was
I
going to
love
ask
it
you
there.
like where did the name come from, all that. So I appreciate you sharing all that. So then from there, where was that tipping point where you were like, okay, now I'm going to go start Tusk? What happened inside of Mundo and all those other situations adding up to now it's time to start Tusk?
Well, so during Mundo, I was in constant conversations with folks. I was talking with entrepreneurs and hearing about their woes and learning from others who are building and scaling. Because the plan all along was to scale Mundo to 5, 10 locations and then sell it and go live on the beach. Right? That's what everybody wants to do: scale to 10 locations and go live on the beach. Okay, so I'm part of that too. And I get to one, and we're profitable, and we're making money, and we're beginning to think about location number 2. And we scoped out the site. We're negotiating a lease, and I realize I am not that happy with this job. And all I have really done is create a job for myself.
Mm,
Um, my dad made it look easy. There are a lot of dentists out there that make owning a dental practice look easy. My experience was it was hard. Hourly wage earners sometimes wouldn't want to come in on Monday after a late Panthers game on a Sunday night football game. I'd get a text at 6 a.m. saying, "I don't feel good." I'm like, "This is ridiculous. I'm trying to run a business here." After enough of that, I just said, "There's got to be something else for me. This job that I've created is not it's not my passion." So began building Tusk long before selling Mundo, and had
mm.
worked, I don't know, 6, 9 months on Tusk before selling Mundo and moving 100% of my efforts into Tusk. So uh, I don't know, the tipping point. I don't know. There were so many tipping points. I would have sold that business 100 times over. It was really,
Yeah.
really challenging for me.
So what? So
I
what drove in? So what drove into Tusk then? Like what? Why was Tusk the answer and not something else?
I mean, it was so a couple things. One, my wife had always pushed me. You need to get back into selling businesses. You're really good at that. You're passionate about the numbers. You understand the numbers, and most importantly, you understand the people. She's like, you're going to be good at that. So she had been pushing on me for a long time while I was in Mundo toiling away. Um, to us, the opportunity looked too vast. It just looked too vast. There were a very few people who understood what adjusted EBITDA was, how you value these businesses, and I didn't see anybody out there that had a full understanding of the buy side and the analytical capability to calculate the numbers for the seller. So we saw a huge opportunity there. And once we started to test the market, it became clear the opportunity was real. So, it feels good today to do something that honestly is like a hobby, right? I love what I do so much. I look forward to it on Sunday evenings. I'm like kind of going, okay, good. I finally get to go back to my happy place. I love my family, love
Yeah.
my wife. Glad I get to go to practice and do all that fun stuff. But man, this is crazy what's going on in our industry, and to get to be a part of it and represent this many doctors with this many buyers and pit these buyers against one another, it is so fun to do what we do.
Yeah.
So I knew it would be good. Had no idea it would be this fun though. At the end of the day.
That's awesome. Yeah, and when you find that sweet spot in work, right, it makes it really fun. Where you look forward to it every week, and that is that I know, I realize most people don't ever get there. Or a lot of people don't ever get there. So if you get there, it's an amazing feeling. And so now you're in Tusk, and now you're focusing on selling. So what? And you kind of said it there. You said there's this crazy market that's going on right now. Can you walk us through what you're seeing out there and how it's impacting the dental buying and selling that's going on right now?
Yeah, so I think it's helpful if we look back. I know everybody's sick and tired of talking about COVID, but I want to talk about COVID through the lens of M&A real quickly,
Mm-hmm.
so we can understand what's going on in the market today. So in 2019, in 2020, 2021, we had this COVID hangover, right? We had COVID that impacted the capital markets where lenders would not loan to private equity backed DSOs to get deals done. We had a lot of deals under letter of intent when COVID hit that did not get done because of the lending markets, the debt capital markets basically closing their lending window. Okay, so we had some pent up demand there. We had the buyers that still need to grow during COVID, but they can't grow because the lenders won't loan them any money to make the acquisitions. Then Biden takes office and says, "I'm increasing long-term capital gains rates before the end of the year." This was back in 2021. And
Yeah.
he sends this message to the market that effectively I am doubling long-term capital gains rates from 20 to almost 40%. And anybody who was thinking about selling their business in 21, 22, or 23 says, shoot, I got to get to market now. So we
Mm.
had all the pent up demand from COVID deals. Now we had this increased demand from I don't want to pay long term capital gains rates that led to one of the largest M&A markets we have ever seen in 2021, with most of the deal flow concentrated in Q4 of last year. If you've talked with any attorney, those poor attorneys didn't sleep in October, November, December. They were closing deals up to 12/31. It was completely bananas. So
Mm-hmm.
now we have all these new deals. We have all these new DSOs built. We were instrumental in bringing 3 new platforms to market, connecting 3 doctor-founded, debt-funded groups with new private equity money. There are over 150 plus private equity-backed groups in the market today. And January 1st hits, and they go, okay, it's fun. We're a new company. Where are the deals? And by January 5th, they start texting us. And this is not the business development people. This is the CEOs of 400, 600, 1,200 location groups saying, where are the deals?
Mm.
So, what we're facing right now is there is an unbelievable amount of demand from the buy side for new deal flow, for new deals. And there, because so many deals got done in 2021 that likely would have gotten done in 2022, but they moved up their
Yeah, they push.
timeline
Yeah.
because
Yep.
of the fear of increased long
Mm-hmm.
term capital gains. There's
Mm-hmm.
not enough deals in the market today to meet demand. So all the deals we have taken to market this year have been met with incredible valuations. We set expectations on a deal. Let's say it's $1 million of EBITDA. We'll say, look, we're based on our historical experience, the conversations we're having with buyers. We think this is a 7.5x deal. That's where we want to set expectations. If you're comfortable there, we're comfortable there. We've got $1 million of EBITDA right now with a 9.5x valuation on it. It's 2 turns higher than where we expected it to be, and it is astronomically high. I was just talking with Josh on my team. He's got a deal in market. I said, how many LOIs do you think you're going to get? He goes, I'm going to receive 20 letters of intent on this deal. He goes, it's there's buyers won't
How
leave
much?
us
Just
alone.
so people understand, maybe somebody who's never sold a practice before. What is the normal amount that they would get?
Yeah,
20.
so
You're
a
saying
million
20
dollars of
letters.
Okay, yeah, LOIs. So in a normal process, it's not uncommon to get, I don't know, 5 to 7 letters of
Got it.
intent, right? So we're talking about triple that, quadruple that.
Yes. So you're seeing
Uh,
triple the activity, and then you're also seeing they're going multiples higher than what you were even projecting, and you were already projecting high. So is it very similar like to someone like me who I've never bought or sold a dental practice, but I see the same thing happening in the housing market where it's like, well, house prices have to come down soon, right? Well, it's like, well, no, not if there's a supply and demand issue. If there's more people buying than there are selling, the prices are just going to keep going up. Is that what you're seeing?
that is exactly what we're seeing. I mean, our prices are a function of supply and demand, almost first and foremost, right? EBITDA is important, but if there's only $1 million EBITDA group out there available for sale this month, it's going to get bid up. These investors, these private equity investors, only make money when they put money to work and grow. So they
Mm.
have to grow to get out of their investment and ultimately sell it to somebody else. So the housing market is yeah, it's very similar to what we're seeing in the dental space. I do believe that we'll get back to some level of equilibrium, maybe by fourth quarter, though.
Okay.
Eventually, folks are going to need to sell their businesses. So, I mean, look, I don't have a crystal ball. Maybe it's a little before fourth quarter. It certainly feels like by fourth quarter we could get there. The mitigating concerns that I have, though, Gary, are twofold. One is interest rates are going to be going up. We
Yeah.
know that. We've been told that. And as interest rates go up, the cost of capital, the cost of debt will go up. And as the cost of debt goes up to the private equity companies, they're either going to have to put more equity into the deal to keep prices the same, or they're going to have to lower prices if they want to put the same amount of equity into every deal. So that is a mitigating factor around valuation. And then the second mitigating factor is inflation.
Yeah.
It is everywhere. I look at the gas station on the way to the work every week. It's up 8 cents. It's up 11 cents. This inflation is going to drive up wages. We're already seeing that. And as
Mm-hmm.
wages go up in dental offices, profitability goes down, effectively EBITDA goes down, and maybe valuations go down. So we have
Yeah.
two headwinds that we're facing right
They're
now
pushing
as well.
against each
So
other, right? So those are two different things they're going to collide. They have to at some point, right? You can't have a business that you're selling for 2x, 3x more than what you normally get, and then getting 20 more offers, and also it's not profitable, right? Because the wages have
Right.
gotten out of control. So where does that, you're thinking fourth quarter, that's going to kind of even things out, or to the, obviously you don't know, but to the best of what you're kind of seeing the way things are going?
Yeah, I think you've got a lot. So last year, a lot of GPs sat on the sidelines. We did a lot of specialty work last year, and in
Mm,
talking to GPs right now, they're saying, "Look, I feel like my best quarter is ahead of me. I feel like COVID is in the rearview mirror. I feel like the mask mandate's falling off in my county. I think I'm going to see more patients. People are going back to work. My office is downtown. I think when they get a quarter or two of really nice revenue, they're going to say, okay, I'm back. I'm ready
uh,
to sell. No
so
one
you
wanted
think
to
there's,
sell at the bottom.
so you think there was a lot of, or you probably know there's a lot of dentists that were hit hard by COVID. They didn't rebound because I think it was most dental offices, a lot of dental offices grew, but there was a big chunk of dental offices that actually shrunk and never really rebounded. And so they're going to need to climb back out. And when they do, then they're going to sell because it was no point of selling while they were low. What percentage of the market do you think that represents?
I it's so I only can tell you what I see, right? So
Yeah, yeah,
most of the market, Gary, most of the M&A market is occurring without Tusk's involvement or any M&A advisors
yeah,
involvement, because
yep,
most of the M&A deals happen direct between the buyer and the seller without an advisor ever coming in. Um, our advice to clients is we believe for some of our clients that time is their friend. And we have that conversation a lot already today. If it feels like your business is coming back, let's not sell now. If you're not in a hurry, if you don't have any other pressing issues, we don't want you to sell at the bottom. We want to see a couple good quarters before you sell.
mm,
I'm certain DSOs believe that there are good times right around the bend, and if they can buy things at let's say arguably less than they could buy them a year from now or 6 months from now, that's when they want to buy them, because they can help grow them and the general economy can help grow them as well.
got it. And so, what are you with these practices that you're working with right now? What are some of the mistakes that you're seeing people enter into agreements, or just things people getting sideswiped by things they're not aware of?
I mean, the biggest thing we're seeing right now is team members, frankly, holding dentists hostage for more compensation.
Yeah,
I think it's tough. I've been in that situation where a team member wants an extra 50 cents or $1 an hour, but the conversations our dentists are having, unfortunately, are, are, are much more painful. A
yeah,
hygienist wanting $70 per hour because she can get that in the, let's call it the open 1099 market.
yep,
And she's been there for 20 years. And I think sadly, what's going to happen here is a dentist is probably going to give her some or all of that because they're stuck and they have patients coming back now. We were just
yeah,
talking about new patients coming out of the woodwork and not enough dentists or hygienists to see them.
hmm,
So they're going to go ahead and give that hygienist that raise, but never forget that conversation that they had with that hygienist and work diligently to replace her as soon as humanly possible. My hope is that that hygienist does not spend into her newfound wealth and upgrade homes and upgrade spending and upgrade the automobile to match $70 an hour, because that is not sustainable. I'm afraid we're going to have a pretty bad backlash here. I think
yeah.
we're going to see wages go up. I think we're going to see margin shrink. I think you're going to see it for 6 to 9 months. And the minute dentists can get rid of the folks who held their feet to the fire and are arguably making more money than they should, um, unfortunately, those people are going to lose their job.
Yeah. So how does that work though? With I know for maybe somebody at the front desk, right? They can jump to another industry and kind of move around. But for a hygienist, it takes time for the correction to happen. So meaning, if all the hygienists are making, let's say, $60 an hour, and they used to only be making 35, 40, then people are going to see that and they're going to come into the market and say, hey, I'm going to train to be a hygienist, and that's going to take a couple years to play out. Or are you thinking that this is going to solve some other way?
No, you're going to see a rush of people coming into the hygiene world. You'll see it through the dental assistant's making 15 and the hygienist is making 60. Like, it's a no brainer. I
Yeah.
mean, I see it every single day, right? I
Yeah.
see her car get upgraded. I see the education get upgraded. I see the home upgraded. I'm still sitting here. It'll happen as fast as hygiene schools allow it to happen.
Yeah. Yeah, I was actually just talking to Greg Stanley. He's been in the dental industry for a long time, and I was asking him about this, and he said this isn't the first time that this has happened. There's been hygiene shortages in the past where the wages would double, or even more than that, and it always seems to correct itself back out. But it takes a couple years, right? Because you have to kind of work people through the schooling and kind of even the road back out. But I totally agree with you. Right now, what I'm seeing on the marketing side is that offices are waiting 5 days to get a new patient in for hygiene appointment. And that's just too long. Like the patient ends up not showing up, your cost, your no-show rate goes through the roof. And normally it's 48 hours. It's like you have to get these new patients in for hygiene or dental emergencies, like same day, next day, 48 hours max. And right now, it's just people are pushing them so far out that then your no-show rate goes through the roof, and it's just you're wasting tons of marketing dollars. So, but you still need the new patients, right? Like they still need that capital to come in through those patients. If they don't have that, then it hurts them. So it puts you in a really weird, like to your point, it puts you in another weird, awkward spot.
Yeah, I feel for these dentists. I mean, I managed the team without and felt like I was taken advantage of on multiple occasions, right? Because you have your team, and if you're a good business person running your dental practice, you run lean without a lot of redundancies, and you've got a bench of fill-in team members that you're excited about in the unfortunate time that a hygienist is out or a dental assistant is out. But this is a different world that these dentists are operating dental practices in. It's hard, and we're not talking about the dentists who are in New York City that are operating, downtown, that have no patients coming back to the office at all right now.
Yeah,
And it's tough. Gary, I'm sure you have a lot of clients in Texas and in Florida and in Georgia and in Alabama, and it's so interesting. It's like COVID's over and it almost didn't happen, and they came back stronger. It's just the recovery is so geographic specific.
It is.
It's tough. Yeah.
Cities downtowns got hit for dental the worst because people moved, and that's another thing. I know you've listened. You work with D a lot, and D talks about it a lot, that this is going to be the year that people are moving, vacationing, and it's true. I think it's going to happen, right? If all the masks are coming off and all the different rules and different things like that are going to come out of play, what that's going to do is it's going to drive people to go on vacation or potentially move, a lot more remote work. And that does hurt the dental office because it's turnover, right? It's churn in your business, and you have to replace those patients. But some of these people that I've seen from a marketing perspective, if you're downtown and you lost 40% of your patient base, marketing can't make that up. Even if you'd have to spend such an astronomical number on marketing to be able to make that up. It's just not possible. So it is very much geo specific, and but it's going to continue to there's going to continue to be winners and losers for sure on this front over the next couple years. One question that I had for you is, what are you working with on people? If someone came to you right now and said, hey, I want to sell my practice, but I'm not ready to yet, what are like the key things that they should really be focusing on to really boost their value?
Okay, so we get a lot of those phone calls, and it's hard. First thing we do when we get that call is we're going to take a look at the adjusted EBITDA and make sure that we see eyeball to eyeball with that doctor, and we can give them an indication of valuation range. Because in this market, heck, they may be at their number and not even know it, given the multiples we're seeing. All right, so let's start with where we are. Then we want to talk about where do you want to go. Right, so some folks will come in and let's say they're at a $10 million valuation, but after debt, taxes, and fees, because they have so much debt, it drags them down to $5 million. And their goal is, I want to be at $10 million after debt, taxes, and fees. From there, we'll model it all up for them and show them based on their debt structure, their covenants with their lender, how many additional practices they have to buy to hit that number. And many times, Gary, folks go, shoot, forget it. I thought I could get there. It's not worth it. And that's a well-informed decision is a good decision. So we start with where they are, and then we model up to where they think they want to go. And all we've done there is identify the gap, right? And once we've identified the gap, we can help you get there. there are certain things that people must do. They must be looking at their financials on a monthly basis. They must have a KPI scorecard, and they must be communicating their their uh, their core focus and their if they're running EOS, what their core values are each and
Hmm.
every week with their team. Um, I have seen culture win inside of businesses recently. When the team is bought in, they are willing to commit to the business and willing to help that doctor see through some tough times. Um, you
So,
can't really cut your costs into
uh
profitability here. Go ahead, Gary.
Oh, I was going to say, so you said culture wins, right? And I know a lot of times, I'll just tell you my story. So for a long time, it was like, yeah, culture is a really cool buzzword, right? And it's like, it probably just helps you sell books. But then I realized firsthand as I grew a business, like, no, it really matters. It really matters how people feel. It really matters how you treat them, how they treat you, how your customer, like that's culture. That is what culture is. In every business, it's just dealing with people. And so, but when you're buying and selling a dental practice, obviously people look at numbers, right? You have to look at a spreadsheet and you have to really break things down. So how does culture come into play when you're trying to sell a practice?
Yep. Um, Culture starts at the top, right? So
Hmm.
anytime we're selling a practice, we're always going to get the numbers right, but then we're going to set up management meetings where the buyers get the opportunity to meet management. Um, we do our best to prepare our clients for those and coach them on what the buyer wants to hear. Um, but at the end of the day, our clients are going to say what they want to say. And the clients who talk about how important their people are and mean it, and they talk about, let me give you an example of what we did and how great this team is. Let me talk about Sally for a minute. She's a dental assistant that joined us 3 years ago. And when we had a flood, Sally went down there and took care of those chairs and cleaned everything up and had us flipped and ready to go. And I mean, Sally did that with 3 kids, and her 3 kids are smart. You hear when you hear it, you know
Mm,
you've heard it, right, Gary?
yeah. Yep.
And there are some people who go, the alternative to that is I got 6 locations. I know I have a dentist down in Fort Worth, but his name escapes me right now.
Yeah.
That's not strong culture. So buyers are asking questions, looking for those type answers to see how interconnected your culture truly is, and see, what drives you. They'll ask things like, tell me a story about when an employee went above and beyond for you. Tell me a
So,
story
so
this. Tell me a story that.
So what I'm hearing
Yeah.
here is
So
that the buyers know how important it is, right? There's no washing that. They know how they
completely.
yes, okay. And so they know that they're probably not going to be able to come in and spot the best culture in the world right away, but they're coming in and they're asking questions to see what kind of culture you've been building, and they're going to gauge that, and they're going to factor that into the offer.
Yeah, so the best buyers we know out there, Gary, and I won't use names here because we'll protect them. They have questions they ask every single target the same. They want to know that they are profiling that individual and trying to figure out whether or not they truly are a selfless leader, if they are ego driven, if they are an entrepreneur at heart, if they can play well with others, will they take direction, how will they handle conflict. I mean, the great DSOs are out there effectively running psychological profiling questions on our clients to see if they're going to be a good fit inside of their organization. It is incredible what you're able to pull out of some interviews.
Wow, this is truly amazing. So this is something that I've been interested in, right? But and you just kind of don't know, and so I appreciate you taking the curtain and kind of opening that up because obviously culture is important, but it's important when you have people doing that and they really value it and they're going the extra mile to really figure that out. So that's amazing. Is there any questions that I didn't talk about today or anything that I didn't ask you today that you think would be important for people to understand about what you guys do?
Um, Good question. I just like to leave your listeners with a couple of thoughts, if it's all right with you. There's
Yeah.
been such a positive evolution in the education that's out there through podcasts like this and conferences. But and I for some of you this is going to be a duh, no kidding comment, but I think it bears repeating over and over and over again. Um, the number of locations you have does not matter. I
Mm.
want to repeat that from a valuation buy side perspective. The number of locations you have does not matter. And let's link this back to cash flow and risk. If I'm a buyer, I want the largest amount of EBITDA at the fewest number of locations. That's the fewest landlords, it's the fewest cultures, it's the fewest addresses, it's the fewest brands. So don't get seduced for how many dots do you have on the map, and don't feel less than when you're at a conference and someone says, "I've got 6 locations. How many do you have?" It is not a telling statistic, and it is not an indicator of value. Um, we have seen a 20 location group with negative EBITDA. They are
why
out
are
there.
people so wrapped up in that? Is it because that's the way it used to be, and it used to matter big time how many locations, or is it that it just people have misunderstood the value there the whole time?
I think people have misunderstood number of locations as a KPI driver of value. It is not. There's something to be said about a group with 8 locations, 20% EBITDA margin that's effectively run. Like, way to go! Like, that's amazing.
Yeah, how'd you do that?
That's really, really hard to do.
Yeah.
But just having 8 locations, you and I could do, Gary, tomorrow with enough bank debt. That is not an indicator of anything other than some banker was foolish enough to give you and me some money.
Yeah, I love that. That's such a great point, and it really changes your perspective, right?
Yep. So that's one thing that I want everyone to believe and know. And the second thing is you need to build the business that you're most passionate about. I hear a lot of entrepreneurs come to us and say, "I want to be just like MB2, or I want to be just like DCA, or I want to be just like this group or that group." Okay, why? Like what are you passionate about? What is your why? And why are you getting up each and every morning? If it's just because you're a capitalist and you want to create as much value in the shortest period of time, okay, fine. Just own that. That's okay.
Yeah.
But you don't have to be just like MB2 to get there. What I
Yeah.
love so much about this industry is you can almost take a white piece of paper and build whatever you want from a legal perspective, cultural perspective, operational perspective, and there's an investor out there that wants it. And you can raise the capital either through bank debt or equity and actually get that business off the ground.
Yeah, when there's so much
Just
opportunity like this, it's almost like it's going back to like what you said. You wake up excited every day about what you're going to do, and so why not build something that you're going to be excited about doing? Everybody's going to win that way.
Right. If I hear I want to build my business just like these guys one more time, there's so many other ways to do this. There's so many other ways to do it. So
and the reason those are.
Go ahead.
Oh, go ahead. No, go ahead.
No, I'm good.
Oh, I was going to say the reason that those businesses.
That's it. I just these are the 2 biggest points of pain I feel in the industry that are just kind of out there, and everyone needs to know it's not about locations and it's not about copying somebody else. It's about blazing your own trail and creating the business that you believe in. Not all the great business models are out there. They're not all done. They're great business models that are being created on a daily basis. Some that are just focused on one piece of the let's call it the dental ADA code. Right? We're just going to focus on this limited scope. We're only going to focus on making sure the patients get what they need where they need it. We're only going to focus on just doing mobile extractions. You name it, it's out there. And the great thing about it is there are buyers and investors for just about everything, so long as it does cash flow.
That's awesome. Well, thanks so much for coming on today. What if someone says, "Hey, you know what? I have questions about what I'm doing and I want some advice or some direction so I can make an educated decision." How can they reach out to you?
Yeah, good question, Gary. So you can always reach me on my cell phone at 704-654-0152 and email kevin@tusk-partners.com.
That's awesome. Thanks so much for coming on today. Amazing content. I learned a ton. I really appreciate you taking the time to do this.
Thank you, Gary. My pleasure.